Hey everybody, Brian here from quantlabs.net. I'm going to show you where the hottest instruments are right now you could be trading. These do not really include stocks, but the indices I do include. Again, this can be, it's not part of my quantlabs.net analytics service. If you are interested in it, it's quantlabs.net/trading. Scroll, scroll down, sorry, to the bottom. It's going to go up $30 a month, 50%. Right now, it's $67 a month, lowest rate you can get. As of probably next 2 days, it's going to go up. So again, today is September 24th, so that's your timeline you've got to deal with. All right, so let's check out some hot instruments. So basically, this comes from Oanda CFD. Do not recommend to trade CFDs, but these are another way to say poor man's gateway into the ETF market, options, futures market, because these are the hot instruments that you could get into right now with all the blood shed happening in the world right now on the markets and whatnot. And it's going to be a clear indication of where people are putting money. And as I always say, if you want to follow where the most profitable areas are, you want to be where the hot capital goes. Basically, hot capital meaning hot capital among all the institutions. So there's different views I generate for this through a Word document. I also include a rank file of all the instruments out there. I don't know how many there are, but I can easily pull that up here in the spreadsheet. I'm not going to go too much into the spreadsheet right now, but I'll just show you the available options that they have. And it's all based upon trend or volume, and also can give you some shorting opportunities as well. So in the CFD rank file, there are 20, looks like 20, 32. So it spans everything: agriculture, finance, metals, financial, and all that. So let's look at the shorting opportunities. I'll go through the format of how this works. But again, this is not currently in the Quant Analytics. But if there's enough people that say they want it, I'll gladly put it in. But I'm just doing this as a courtesy to show people where to go right now financially. So let's see what's going on. Okay, so here's the Word document. This is now generated every hour on my system. I could easily send this out. So where are the shorting opportunities right now? This is kind of a surprise. Hong Kong, 33 would make sense. Here we have the classic moving average cross signals. I'm just kind of working on one for 3 simple moving average time periods on bars. That may work. I can't say that's universal as well. But you can clearly see that there is a turn down here, and it was doing okay despite all these protests. You could see here the trend was looking pretty good, but those thugs in Hong Kong just wanted to destroy everything. Now they're destroying the markets in Hong Kong, and you can even see on the Fibonacci levels, it's still, if that was dealt with, I'm sure this would skyrocket and be a big contender for global performance. But you can see here over the last few days, just people I think are giving up on Hong Kong and where to go. So Hong Kong's not looking good over the last few days. And you can see these recent down moves on this 30-day view. So that's a shame. I was hoping to see Hong Kong turn around, and as I said, it probably would be up there. Now, let's check out the general longing opportunities. There's a bunch there, but this is not filtered on anything, so it's including everything. It's not filtered on volume. It's not filtered on trend. So this is all of the 33 instruments to be considered. Okay, so this is going to be in order. Now here, it's pretty evident the number one opportunity right now is gold. You can see that performance here. It's just been moving up and up and up as the markets turn down. It's above trend. It's come down, and you always say buy the dips, buy the dips. This may be an opportunity. Let's dig further. It is overvalued considering over the Fibonacci levels. Also, it has been turning up, so it had a recent buy opportunity. It is above momentum. You can see here it did hit its upper range on the RSI and drop back, but it's still trending up. And that's just due to all the uncertainties in the world. So gold is a very, very good one to be part of right now. You can see these bar moves moving up. Okay, so that is just general longing opportunities. Let's do a filter on volume, the opportunities there. So right now, the only one I'm seeing opportunity-wise, you can see here, the CFD has to be over 100K. That's the minimum standard to meet in this Word document or report, whatever you want to call it. So it looks like India 50 has some opportunity, and you can always compare the volatility against other group reports. I'm not too concerned about volatility right now. It is somewhat trending up, so that's looking pretty good. There was a buy opportunity here, so maybe India may be a potential to move up. And historically, looking at the timeline, we are seeing a general move up since March till about June. But look at these huge moves. That's a huge bar move up. That's probably news driven of some kind. But here, once it usually crosses that trend line, that's a good classic entry. So it is approaching it. So it may come off. I can't say, but if it's a news, or if it is a news driven event, then yeah, you have to be very careful. But that seems to be. Let me just check on the Fibonacci. See, it's very tight, but there is some looking good for opportunity on that. But you can see here it's dropped back. A way to confirm that is to look at obviously the upper historical RSI, and as well it's still quite above trend, as well as here with the momentum, which looks pretty solid. Okay, so that is India, the 50 index. Let's check out some other stuff here. So now we're going to base it on trend. Okay, so the trend goes back about a year, I believe. So this one will reveal quite a few hot items. This is pretty cool, and it'll also show the safety havens as well. Here you can see Europe. Oddly enough, it's looking good here. I'm not a big fan of Europe. The trend is pretty strong, but lately it's just not been getting above the historical trend like in this time frame here. So that's not enough for me to go, yeah, I'm going to buy. I think there are better opportunities out there, but historically this has shown to have a fairly strong trend. Here in the last leg up, it's been fairly strong. It's been running out. I don't know what the latest Draghi move. I think it's insane what the ECB is doing, but what do I know? I'm just a schmuck, right? You can see here that the momentum is dropping, so that's probably a confirmation of what I'm thinking is that maybe, just maybe, the recent announcement from the ECB is killing off that opportunity. And that may be possible, but it may come back for just some magical reason. But as I said, there's probably some stronger opportunities out there. Okay, so now we're looking at the U.S. 30-year bond. These long-term ones have been looking good as a defensive play, but it's just based upon what's going on in the markets in the U.S. If the markets are strong, this comes down, as you can see. And that is an indirect relationship that's quite clear above trend. So I do think that the U.S. markets will continue to go down. So then you can probably quite a bit with confidence say that this trend will continue to go up. So this may be one of those buying opportunities as a defense play. Now, depending upon what the Fed does in terms of their announcements, this may also get killed off due to negative interest talk and all that kind of speculation. So that might not help matters for them. So again, it has been coming up recently. Let me just show you here. So it's been a steady. If the markets have been down, it's usually a sign. So if the RSI is at 50, approaching zero, maybe, just maybe, that might be an entry point into this asset for 30-year bond. So again, one thing you want to look at is the group standard deviation. So if I go to, let me see if I can put that. Okay, so if I go back up to the group volatility, which is here, you can clearly see that both the volume is much higher than the average of this group volume, as well as the volatility for what I just showed you is definitely lower than the group. So the 2-year bond, is the volatility is fairly low, but you're still getting some opportunity here. But if you are looking for stronger trend, which obviously means stronger moves up, then this is your one, is the US 30-year versus the 2-year. So I'm going to say probably the same opportunity exists, but you can see it's starting to move up again. So last probably 4 or 5 days, that was a buying opportunity, but the last few days it's going back up. So again, it's just related around what the markets do in the US, because these will move in the opposite direction. But you can see here, again, the RSI looks good, but the entry for momentum at zero is something maybe, just maybe, you might want to look at. Okay, so we've got the 2-year bond out of the way. Now, here's the next one, US bond, 5-year. I'm not going to spend too much time on that. It's probably going to move in similar pattern. But in terms of order of preference, in terms of performance, it's the 30-year, 2-year, then the 5 years you're looking at now. And I'm sure somewhere in here will be the 10-year. But that's the US bond, so that is a good one to be in, because everything else seems to be trending down. But this is the last one to be at the party, I guess, before it will at some point not trend down, but it'll go up. But once the negative interest rates come down, I think the US Treasury will be in a lot of trouble. Here's an interesting one I find outside of Europe. Everyone talks about Germany, but this one seems to be a star performer in Europe, is France. And this has been continuously popping up in these reports. You can see here the trend has been fairly strong, but lately the performance has been not that good. But historically, the trend has been fairly strong. But if you had to put into Europe, maybe France is the place to be. I can't say. But it's overvalued right now, and it probably will come back down. You can always check, as I always do, in the general momentum and the RSIs. And as I said, it's trending down the last couple of days. So you're not going to get awesome performance here whatsoever. So it's something I would stay on the sidelines with. Now, again, this is long-term trend over the last year. So if I was to measure just short-term trend, there may be some better options out there. But here we have the 10 years predicted. Same thing. I'm just not going to get into it, but you do know the order of performance with the different bond maturity dates. So continuing along here, I mean, these are looking pretty good. So if I was a betting man, I would rather put in the U.S. Treasury versus any of the indices right now. But way I looked at just India, that looked pretty good. But I've seen that happen again where it looks good and it just comes off within a few days. That's why I'm always looking at the RSI and the momentum to verify that, yeah, it may be reaching the entry points, but if you want to know how to time it properly, as I do in my actual strategies and bots, this is where I use the Fibonacci levels. Because if it's hitting this, let's say, midpoint here, you want the 382 level as the entry to get in as your entry. And I'm always getting them reversed between 382 and 618. So, but usually we'll just leave it here in the description on the on the purple line here, or magenta, and that's the 382 level in this report. So that's the order of stuff right now. The next one that's coming up is XPT Platinum. I do believe this is Platinum. So this might be. Here's the problem. You've got a trend down for last year, and that's because the market's been surprisingly strong. Are we in the last kick of the can at the party? Probably. So the metals are starting to turn around, namely platinum. You'll probably see maybe silver or gold in here, but that's pretty good. Recent performance is platinum, and again and again and again. I'm always looking at the general. A few things here that you could take away is this metal has not moved. The Fibonacci lines you can see here are very, very tight. There has been a good solid run up, but again, it hits that classic RSI and it gets beaten back down price wise. And again, it did even on the momentum level hit negative momentum. Now it's back to zero. So if it starts to drive back, and what's going to drive that is going to be the negative sentiment in the U.S. markets, because as I said, that's the last bastion. So even though we've hit, it looks like since up until roughly early September, there has been a run up, but then it's been flat since. So are we hitting a potential? The only way to really know that is to do a look at things like, I'm always looking for very, very wide wicks in the candles, because that can be a potential reversal. The other one I look for is the momentum. The momentum's too low for me right now. Is there enough momentum or support to carry it past through, let's say, the level 500 on the Fibonacci levels, where I want to see it to move up to the 382 or to that entry point line that I look for. But that may not be enough. But you really got to look at a variety of indicators. And when I look at, as I explained in my webinar yesterday, is like rate of change over the last couple of days or even hours if I'm doing intraday, which is mostly what I do, and a few other indicators that I use. I talked about in that webinar. Now, maybe did I mention that webinar? No, it doesn't look like I did. So if you come over to youtube.com/quantlabs, you go into the video section. Recent, it was put up yesterday again. Today's the 24th of September. Okay, come on. I gotta tell you, all the social media's just been getting really slow with all the junk that they put into these things. Anyways, here we are on my channel. Okay, so historically, what we're looking for is the video called, which you just put up, Real Profit and Loss, Trading, Track Record, and History webinar notes. So that's what you're looking for yesterday on what I'm referring to, the webinar in today's video. So continuing along in the report, we're looking at platinum. You can see here on the 30-day view, it's very flat, but we did have a run-up opportunity. Okay, look at this move on silver. I did a report of about a week ago, maybe 2 weeks ago, and I did say that this was going to be the one to watch. And look at that performance. It's been pretty good all the way from maybe 14 and a bit, all the way up to reaching through 19. So that's a $5 move on originally on a 14, I'm going to say not quite 30%, but it's pretty close. A 25% move. Since, let me see here, we are looking at a move in the last week or so. So, again, these reports are really important because it'll tell you. I mean, as I said, this is run every hour, and that's a 25% move in a very short time, and you miss that opportunity. This is why I would recommend you get on the Quant Analytics service and dig into this stuff, because that 25% move might have been your trade for the week outside of the crypto, which I've seen with a couple of crypto moves, namely Bitcoin. So again, unless you like flipping burgers all your life, that's your choice. But these are where the big boys play, and you can see that opportunity has come. and has been missed on silver. And now people are talking about silver as the next big thing. Well, that opportunity was maybe a week or two ago, but not saying the opportunity's missed, and it may be another new entry has been placed. As you can see, is a new run up here. And again, there's a slight trend down, but if you give it a full year, this will start trending up. We can see here Fibonacci levels. It's still above that 382 level, not 618 if you've been following me, but it's really a 382. So there may be another run up to this 236 level. And look at these bar moves. But it's all related around how the U.S. markets move. You can see here, just now it's starting to build momentum. And it's just in between 50 and 70 halfway on the RSI. So, it's still not too late to get into this latest trade. Gold, sorry, yeah, man. Let me make sure I got these. I always get my XAU and XAGs. Yeah, this is still silver. Okay, so we are, I believe, on silver. XAG USD. Okay, so here we are. One down move yesterday, but it's these little wicks you look for. I've been talking about those for a while, and they can be classic indicators or reversal of pivot points that you can use somewhat for in the candle analysis I did a while back. Again, these are usually daily positions you're taking on. So there you go. Here's another mysterious index that's been doing quite well, not well, but better than most, is Australia. You can see here it's had a nice run up over the last few days. This is above trend, and in the last short term, it is having a nice historical move up above trend. So it's now above trend right now. So that would mean that who knows? That would be one to watch for sure. It's above the Fibonacci levels. It will come down at some point. The technical watchers will push it down. And maybe that might be happening yesterday with this negative bar just touching under the 70, but it is above the 50 of the RSI. It has been over momentum positive since September. So this was an opportunity, again, missed. Not a lot, but let's see, 6,400 all the way up to 6,700. That's roughly just above maybe 10, 12% move for this month. That's pretty good in Australia. And that was one that we've been watching for the last few months. And France is the other one. And let's see what our next. But you can see here, hold on. So when you look at the 30-day view, look how much it's come off. It's still above positive momentum, but the momentum was at 200. Now it's at maybe 75. So it's come down that much. Will it go down further? Nobody knows. The RSI on the 30-day view is pushing above 70. So yeah, that's one of the reasons why it will come down, because there may be enough technical analysis watchers looking at that saying, no, let's get out. And again, here we have the UK 10-year bond. Not as good as the US, but it's had a nice steady run up. And there's probably a Brexit trade here for sure, especially with the recent news of the Supreme Court in the UK saying, no, you can't prorogue the Parliament. So what happens? The gilt or the UK bond 10-year does go up, which it has in the last, looks like, day or so. And I can tell you on the Forex side that yesterday there was a lot of trades with the pound against the franc was doing quite well in the trades. That's all my system was picking up. That was definitely a Brexit trade. And again, if you want to miss out on the Quant Analytics, that's all up to you. But in the next 2 days, this is very valuable, and it seems to work really well. And as I said, as this thing proves to be profitable over the last few weeks that we've been testing this, it's been profitable. The reports are up on the track history on the site at Quant Labs. You can check that out. and it is positive, profitable, and it's been consistently doing well. And if you want to get in the Quant Analytics before it goes up from 67 to 97 a month with the Forex or the Forex MetaTrader EA on top of the live signals that have been developed over the last few weeks, it's going to go up, and it's been proven itself. And there's other trades here that I've talked about. You missed out on probably a 25% trade on silver and some other ones as well, like the Australia index, because to be honest, nobody's talking about it. You only find it through things like this on these analytical reports that I wrote that will do exactly what it's supposed to do. So right now, and if you want to go check it out, just go over to, as I said, to quantlabs.net/trading for that. Again, let me repeat that. That's quantlabs.net/trading. Scroll down to the bottom and you'll see that little orange button that says get started now. Okay, moving on. So we are at the UK bond. I believe this might be China. Yes, it is. It's China. How do I know this? Because of what I've been tracking. China is another weird one. The China 50. Look, it's above trend. It's coming down to trend. But, I mean, it's a simple trade. You just watch historically over the last year those pockets of opportunities. And once it is above and pushes above the historical trend, that's your entry. And then when it goes below or peaks at what you think is peaking, you get out of the trade to maximize your trading opportunity, like here. Again, if you're not taking advantage, you must love taking the bus to your clerk job. Meanwhile, there's people in Thailand living like like the big fat cats that they are, doing simple stuff like this, plus with the crypto and the Forex trading that seems to be working real well. So China's doing okay. Hardly been moving, but when it moves, it moves. And right here is one of those opportunities right there. Again, historically not doing too good. I do think once the U.S. does sign a free trade deal, you can see both the U.S. and the China market should obviously pop quite a bit, despite whatever the deal is. Good or bad, it will still move. The better the deal, the more ironclad it is with this intellectual property business, you will see both move. But the Chinese just don't want to do it. I don't know why. But you can see here, it's come off. The momentum has dropped off. And you can use this indicator right here, both the RSI as your indicator, say, okay, it's kind of approaching 70. Maybe I should kind of take my profit, let it ride, or that's where the fear and greed comes in. Or you could just basically use the momentum here and you can measure historically what that momentum will be before you dump the trade. But there's been lots of trading opportunities here. Right here, the run-up I was telling you was probably late August till about, I'm going to estimate, maybe first week of September. But you can see the move here from all the way from 12,600 all the way up to roughly peaking up at around 1,400. So in the last month, 6 weeks, you could have made another 10% with a Chinese trade here with the China 50. And just grab an ETF or anything that has a China 50, maybe even a CFD for all I know. I don't know if you could trade it outside of the U.S. But the opportunities were there. It's too bad that people don't take advantage of this. Again, I will go over where to go. Okay, so if you want this stuff, quantlabs.net/trading. As I said, this service is not part of this, but I can easily just by flipping on a switch, I can include it. You tell me, but you can see how valuable it is and the opportunities that you probably missed out on because you didn't know, because you're the one who follows what's on some blog or some news channel or something. But are they talking about silver? And when they do talk about silver, oh, it's too late. And everybody piles in, and that's when you get out. Classic trade, when to get in and get out. Other than that, hopefully I'll help you out, and we shall talk to you later. Thanks for watching. Have a good day.